So the other side of it is like economically, I'm very certain that this is moving forward. Cycles are irrelevant, but to the extent that people still expect the same pattern happening, there might be some self-fulfilling prophecy where just because a lot of traders are expecting Bitcoin to go up in a certain period of time, they will be positioned ahead of time. That position causes extra demand. That extra demand causes some bubbles.
Hey guys, welcome back to the show today. I'm here with co-founder of 21st Capital, Sina. How are you doing today?
Very good. Thank you. Thanks for having me.
It's a pleasure. For those people that don't know you, do you mind to give us an intro and tell us a little bit about yourself?
So I am a professor of business. I primarily do research on businesses through the lens of data. I do a lot of data analytics and econometrics. Then my second job is to work on Bitcoin. And we have recently established 21st Capital, and we offer self-custody solutions plus analytics content. And I'm also a passionate Bitcoiner for a very long time, and I'm excited to share my experiences and ideas with the audience.
Amazing. Thank you so much. And how was your journey into Bitcoin? How have you discovered it?
Very unique one, much different from a lot of other people. My journey began through the lens of research because I was in 2016, I was in the middle of my PhD program, and I was getting very excited about the business applications of blockchain and what are the things it can do to our business operations, to marketing, to supply chains for traceability of assets and so on. So I dug into the technology, studied it for a while, but then ultimately switched on a different topic for my thesis. It actually turns out to be not a bad choice because business applications of blockchain are very tricky, and some of it actually didn't even make a ton of sense to me. I was talking to a bunch of IBM engineers about their blockchain initiatives, and I wasn't getting straight, clear answers. So I ultimately pivoted. But once I finished all that, because you're pretty much working 24/7 in a PhD program. Then I did a postdoc. Then I worked in industry. Then I began my professor job. And little by little, I got more focus and more time. So in 2020, after all that money printing and inflation and so on, or at least prediction of inflation, I got very, very much obsessed with Bitcoin. It moved beyond just an academic interest, and I got into the rabbit hole, relearned the technology because I did have the basics. I had taken some cryptography classes, so I didn't have to kind of teach myself what is private key, a public key, and so on. The big question for me was the social side, and to just examine how can money live outside of the government, and is it going to be easily crushed? So I was these are the stuff I was worried about in 2020, and once I finished all my research, I figured out. I mean, I'm obsessed with this thing, and I don't want to just keep it as a hobby. So I began producing educational content on the intersection of Bitcoin and economics and the concept of money itself and the evolution of money. We created a bunch of online courses and build a community and so on. But this year we expanded that even further, formalized relationships with a bunch of super cool Bitcoiners that I've known for a while. And they have been doing their own work, orange billing people, and sometimes helping people just as a hobby, other times more professionally. And then we came together. We started a consulting business where we were solving issues for people. One of our clients was just interested in learning about Bitcoin. So we created a whole course, several hours of education about what it is. Other people have issues with, they lost money, they don't know how to work with a wallet, and some people just want to learn how to self-custody and so on. And that also expanded into a much more broadly appealing service, which is our custody service. So I guess that's where that's the journey. And then the other thing, that was very interesting to me in my journey was that I didn't get as much distracted with other stuff. Like everyone else, I was seeing like Ethereum surpassing Bitcoin a ton. It was just going up in the last bull market. But I guess perhaps because I did a lot of research early on, it stopped me from kind of getting FOMOing into
Yeah.
other coins. And really happy, but it's still, it doesn't mean they can't go faster than Bitcoin and so on. It's just a matter of risk reward and putting your money where risk reward is the best. Sometimes you can grow faster, but not without taking a lot more risk. A lot of people just can't keep these two things in mind. Sometimes an asset that grows faster than Bitcoin is not a better investment. So that's something I'm really glad about, right? I did a lot of research. I guess that's also a personality. I'm very skeptical. I won't make a decision unless I'm really sure about. But then once I was sure about, I went all in and never looked back. So I just moved everything out of the TradFi, and I'm fully on a Bitcoin standard.
Amazing. What a story. Thank you for sharing it. I mean, was there one thing who made you go, oh my God, this thing is amazing?
You know, deep down, I had this challenge with myself that we have extremely or too powerful governments, and that's been there, but I had no solution, nothing, right? It was just a sad fact of life that I had accepted. And I was seeing all the problems that come from it, and I had grown a little bit I was like, I was just trying to watch the politics and everything that happens in governments from outside and just shaking my head. I knew something's not working. But the problem was everything was being controlled by government. So I was extremely interested in seeing what else can be done. And then once I learned about Bitcoin, I realized there is this technology that through a very complex mechanism has enabled itself to live outside of government control, which is promising a new system, something that's different, something that is not political, something that's global, it's not national. Like I said, I'm a skeptical person. I'm very skeptical of like someone that gets to a position of power and then I have to trust them moving forward to do the right thing. I just don't like that, right? So I'd rather open networks, use open networks, use permissionless systems much better. So once I realized this thing, I was like, oh my God, this thing has the potential to resist the most powerful thing in our planet, which is the government. That was the light bulb, I think. Everything else was awesome and plus, but none of it would have mattered if Bitcoin wasn't using this decentralized mechanism that makes it resistant. If something can be killed, it will be killed. So none of the other advantages really would matter in the longer run.
I completely agree. I share your vision also. But for me, it was self-custody, was the fact that I could actually own it truly. Because besides my body, I don't think there's anything else, as far as I know, that I can truly own, because everything is landed and you can only borrow it. I mean, to a degree, also your body is borrowed because, but depending if you want to go into philosophical or religious topics, but
you can generate yield on your body, I guess.
Exactly. So technically, right. But I was actually really intrigued about the fact that I could truly own it if stored properly. Do you buy into the 4-year cycles? What's your view here now? Because for the first time ever in history, we've seen the all-time high prior to the halving to begin with, but also we have ETFs. So do you think they're going to change these 4-year cycles?
That's a very important question, I'd say. It's key because it's going to determine which one of the completely different futures we're going to face. So obviously, what caused halvings was the significant shock, the supply shock that come from miner rewards getting cut in half. In the early days of Bitcoin, that was very substantial compared to the liquidity of the market. So you cut supply by half. It's essentially like you introduce a new buyer that's buying every single minute and every single hour Now, that buyer is basically buying all the time, every day, and its effect is cumulative, right? So immediately after the halving happens, it economically speaking, it has no effect. But if that buyer continues to buy, that depletes the reserves everywhere. And the only solution to deal with supply and demand is to raise the prices. So typically 6 to 9 months after halving, we've had these massive bull runs, which have been a great positive for Bitcoin. Volatility typically is anxiety inducing, and a lot of people actually might think this is a bad idea. But for Bitcoin particularly, all those bubbles, all those fluctuations are its PR campaign. So the higher the price goes, the more people learn about it, and because of that, more money comes in, and this turns into a self-perpetuating cycle, a flywheel of rapid growth. So that's not necessarily a bad thing, but we've had those bubbles. Now, moving forward, if you think about future halvings relative to who else is buying, right? Just think about this year. ETFs have been buying a lot more than miners, and sometimes one ETF buys 1 month worth of miner supply. So, economically speaking, with everyone else buying like ETFs, Michael Saylor, several copies of Michael Saylor that are coming up, Meta Planet, Semler Scientific, they're all trying to accumulate Bitcoin treasuries. Who else? We have, Reddit CEO talking to Michael Saylor about it. Michael Saylor is about to give a presentation to Microsoft board about holding Bitcoin. This is just so many things are happening that even if a portion of it happens, you will see a geopolitical global rush to buy Bitcoin. And that's just going to make miners absolutely irrelevant. So the other side of it is, like, economically, I'm very certain that this is moving forward. Cycles are irrelevant. But to the extent that people still expect the same pattern happening, there might be some self-fulfilling prophecy, where just because a lot of traders are expecting Bitcoin to go up in a certain period of time, they will be positioned ahead of time. That position causes extra demand. That extra demand causes some bubbles, but it's going to be a lot less pronounced. And also crashes are going to be a lot weaker. With all these ETFs, tons of passive flows are coming in, and all those flows actually buy more Bitcoin when Bitcoin is lower. So they turn into dip buyers, like perpetual dip buyers that aren't really scared. If you've set up your Fidelity account to buy, to throw your money into this a basket of ETFs, you don't necessarily care about price all the time. It's a fixed amount. You don't care. So you're not going to be scared like the rest of the market. And this will dampen the volatility. Previous cycles, it's been a lot of pioneers and a lot of degens as well, a lot of leverage. Now that's been replaced with massive money from Wall Street, who are much more disciplined investors. So, long story, but I think halvings would be a lot less significant moving forward. By the way, my own analysis also just clearly shows that volatility of Bitcoin has been going down. So if you look at the day-to-day at price change in percentage, in the first few cycles, it was significant. But within a cycle, it also changes closer to the top. You get the maximum volatility. In the bear market, you actually get a very low volatility. But both measures have come down substantially, and I expect them to continue to do so.
I'm so glad you said this. We are so aligned on the thinking, and it doesn't happen very often, because most of the time I have people, they come on the show, and it's great. I love having, different perspective, because after all, we are discussing here. We are trying to, figure out this beautiful asset. But what you said, 100% in line with me. I also believe ETF buyers are made by long-term holder. I think we might see for the first time a different cycle. I mean, people try to label it with super cycle, but all I'm trying to feel is like, I don't think we'll see another 70% drop, because those people that are buying ETF, which by the way I'm a big fan of because I think they help propagating the asset, I think it's going to help us going up steady and slowly. So maybe, and time will tell if we are right or not. But I think this cycle is going to be slightly different because now the players playing different games. Before we had retailers coming in, like you said, degenerate, oh, I double my money, I'm going to sell, because they were thinking in terms of fiat. But now these players, they are buying those products and those assets are thinking about protecting themselves from losing fiat, so they don't want to sell it. So Michael Saylor is going to orange pill so many people, and he has a playbook, 30 billion in, like 100% in profit. So if you are a company now who has cash, like Apple, Microsoft, trillions of dollar company, cash on the bank account, I mean, if you're not considering to allocating a small percentage of your portfolio in those assets, what are you doing, man? I don't get it. So I'm giga bullish, 100% like you. I completely agree. These ETF has changed the game.
And just imagine how far we've come in 4 years. In 2020, like I said, I began my more serious education work, and number one thing we were hearing from people is government ban, which was understandable. And like, even if one famous person talked about Bitcoin, everyone would be super excited. People would like retweet it left and right on Twitter. Hey, it was massive. But right now, like, everyone is chasing us. We have converted United States president. Like, Trump used to not like Bitcoin because he thought it's competing with the dollar. It changed. He did a 180. Now his whole administration are either direct Bitcoin advocates or Bitcoin owners or Bitcoin friendly people. And the effect of this is not even appreciated enough, right? So you got rid of regulatory one of the few risks that had remained for Bitcoin, which was regulatory hostility. And Bitcoin was so powerful that had an impact, I believe, in the course of politics. And people who resisted it, like Elizabeth Warren or SEC chairman, they are out of the job. So or at least they've lost influence. So it's just difficult to imagine, what's going to come next year, next couple of years.
We'll figure it out soon if he's going to free Ross and do all these things that he promised. But mostly, I was reading today, Cynthia Lummis said they want to have 1 million Bitcoin as a reserve. I mean, that's like a lot of Bitcoin.
It'd be a shame if US builds a reserve and they own less than Michael Saylor. So
exactly. So I think we're going to see a fantastic 2025 and 2026 coming in. Maybe this thing is going to change a little bit, because now if we have government behind this, I mean, imagine if Trump comes up and says, hey, we're gonna build a strategic reserve into Bitcoin. I mean, what do you think everyone else is going to do? Well, at this point, I can't not have a position in this thing. Like, we literally front run everything, front run business, front run government. I mean, El Salvador has been buying 1 Bitcoin every day since a while. So, and now probably people are looking at this thing and say, hey, wait a second, what's happening here is interesting. I mean, how can we not see this? If you are a financial advisor, I mean, you are not doing your job if you don't do research on this asset and say, hey, this thing is going up average 50% a year. So maybe we should, pension funds, maybe we should consider offering them a long-term exposure to this thing. And then, like you said, it becomes a self-fulfilling prophecy. You said something really interesting. I'm also full in. I live in the Bitcoin standard. I have a super small amount of fiat. I give myself an allowance, a few months to pay petrol, pay rent and all these things. And it took me a while to adjust to the volatility, because this thing swings. And I don't know if he's going to do it again, but looking into the data, we've seen 40% drops, 30% drops, even on a bull run. So how do you deal with volatility? Have you gone into a monk mode where it doesn't affect you anymore, or you're still feeling it? How is your perspective here?
Mostly the monk mode, but I would say in the bottom of when we went from 67 to 20, I was feeling nothing. From below 20, I was getting a little bit nervous, not about Bitcoin, but about like seeing people around me losing hope and just worrying that they might do crazy things and start to dump their bags. But the problem for me was that I didn't have any money left, because I was just buying all the time. I was getting my wage, and all of it would directly go to Bitcoin. I wasn't necessarily interested in the price going even lower because I couldn't benefit from it. But this is what I meant with doing your research. I'd like to think I did things right, so I was just made myself prepared before doing anything. I had my thesis right, and my thesis didn't depend on the short-term price. In fact, I thought even if this thing goes down to $1,000, because of the fervent core that it has, a lot of us love this asset. This is not an investment. It's more like participating in a new world, in a change for the better. Even if there is just a small group of people ready to still bid, this thing can go to very low levels. Those people will just buy a ton more, and it will begin coming back up, and that will tell everybody that it's still alive, and more people will come back in, money will go in, and then the fundamental thesis will begin playing out again. So this gave me a lot of confidence, and especially because even if I feel a little bit anxious, think about how bad everyone else is feeling, and that's a great sign that we're around the bottom. And in fact, at that time, I was looking at the futures market in 17,000 to 16,000. I was looking at futures. The positioning was extremely bearish, and some of the data also told me, "Hey, this is a great place." So I just kept buying, and in fact, I increased my DCA until I ran out all the money. But I still kind of kick myself for not trying to get some more cash through other means. But I had my own system, so I don't want to touch things too much. The biggest threat to my own to your investment succeeding is yourself. So if you don't tweak it much, it's kind of serves you best. You can look at some of the data and learn how to read other people's thinking. That was helpful. Even more than that, getting your thesis right, doing your research. If you have a significant investment in Bitcoin and you don't feel like you understand Bitcoin, you are overpositioned. That's not great. So the best way to succeed, in my opinion, is to go, first of all, do a ton of research, find a very fast horse, and then ride it with all your power and give it a lot of attention. So I'm right now, when we are at 94, I'm getting messages from people. Hey, I want to join. Can you advise me? Is it a good time to join? I'm like, we've been saying this for many, many years, and you basically are coming to me, and still you ask me to do your research. I can guide you, but some people are like, is it enough to just spend a few days and get invested? I'm like, no, I definitely can help you, but you have to have an internal interest to go deep, because Bitcoin is very complex, and I don't recommend anyone taking a big position without understanding it, because once it drops, you're gonna run for the doors and you're gonna make crazy decisions. If you do your analysis right, if you have the right mindset, then you're set up for the long run, and you won't feel the FOMO much, you won't feel the fear much, and you will stay in the long run, which is the best. I doubt that there is a trader or like a short-term trader that has outperformed someone that's in Bitcoin for 8 years, right? So if you 8 years ago, if you started trading versus hodling, my money would be on the hodler winning. What's the difference? The hodler just gained so much conviction that made them think, despite all the volatility, I should stay in this thing. Trader unfortunately spends so much of his time analyzing the chart without really understanding the underlying investment. So it's a long-term versus short-term mindset, and long-term wins all the time.
This is what I've been doing as well. Like sometimes I have phone calls from, depending on the cycle, where we are in the cycle, some people I've spoken to maybe a few years ago, hey, my Bitcoin double, it's a good time to sell. Well, Bitcoin is the exit strategy. You are missing the point. You don't want to sell this thing. You want to buy this thing.
When I tell people like do DCA, this and that, they're like, okay, when do you sell? And that's when I'm like, okay, let's take a few steps back and start from the basics. We are not trying to make a quick buck in this thing. if you buy a house, you don't say, okay, next year it's gone up, so let's just sell it. It's something it's kind of like the Warren Buffett analogy that says, just because you get a new price for the asset every day doesn't mean you should sell it. This is an investment, in one sense at least. Like I said, it's much bigger than that, but it's a long-term investment for a lot of people, and it has to be matched by long-term thinking. Price targets, all that doesn't matter. I mean, you sell when your fundamental thesis is hurt. If Bitcoin stops being a better money, if Bitcoin stops, outperforming inflation, if it stops being decentralized, absolutely, I would be the first one to say get rid of it. My bet is, first of all, that it won't. And up until that point, there's no reason to sell, because it's at any point in time, it's the best use of your cash. What else are you going to buy with it?
Exactly.
Right?
Exactly. My answer is like, sell Bitcoin to buy what? I mean, what am I buying? So if you can give me an answer, well, and I'm listening, but am I buying fiat, which is depreciating, over time? I'm selling something that goes up over time to buy something that goes down over time. It's not really clever. Okay, of course, I know you need to have a position in fiat to manage your life down to a degree, but you can manage it. You can say, okay, a portion of my portfolio is fiat because I have to do so and so and so. And by the way, shocker, if you want to be financial free, I think the first step would be to plan your financial resources, right? To understand how much money you're making, how much money are you spending. So the whole journey, it's totally needed for you to become free. It's not like you buy this thing with zero research, YOLO into this asset, and in 2 weeks you are a multimillionaire. That's a fantasy.
One phrase I use is Bitcoin punishes tourists. And this has been true like 5 years ago. This has been true 2 years ago. Like any person that I see, they're like, yeah, I'm so smart. I'm smarter than everyone else. I'm going to just get into this thing, use all this sophisticated analysis and outperform everyone and get to my beloved fiat money. They're the ones that lose the most. And the person who has done the most research understands it the most. Over the course of history, they have been the main winners, and there's beautiful poetic justice in that.
If you want to buy Bitcoin, right, you have to first understand what you're buying. Like Michael Saylor says, you have to put some, proof of work also within understanding the asset in the first place, because I believe this is a journey, and then you get to a point where it's not going to be day one. Day one, I mean, I was one of them. Like when I bought Bitcoin the first time 11 years ago, I thought I was going to become a millionaire in 6 months. That's like, this thing is going to millions of dollars and I'm going to buy this much and I'll have Lamborghinis and Ferraris. That's how I gone in. So I'm not judging. But all I'm saying is the more you do study this thing, the more you understand that actually it doesn't matter, because the best thing you can possibly do is accumulate as much, because it's going up forever. Is there anything you would do now? I know you've been in Bitcoin for a while, so you're an OG per se, but if this will be your first year in Bitcoin 2024, what would you do?
I guess I'll do the same thing. I'll just go out and study this thing, perhaps get myself a bunch of books, because Twitter Spaces and all that is awesome. It's social, but it's hard to gain a lot of information without losing a lot of time. So I'd love to read about it and understand and think. If I didn't have conviction already, I would first build that conviction. Okay, I would answer a bunch of my questions. First of all, most people are interested in the price appreciation potential. Okay, so I would ask myself, this has gone up so much. Is it already in a bubble, or is it going to grow? And to understand that, you'd have to again fall back to your fundamental thesis. Is the next year a better year than this year? With everything we've said about more people coming in, regulatory 180, strategic reserve, additional companies that are copying Michael Saylor, all that, plus many other things, options on ETFs was just approved. Now more and more tools are available for Wall Street, adoption going higher. With all that, so there's a clear answer to whether future is better for Bitcoin or worse. The other thing is, even if the fundamental thesis is awesome, it might still be short-term volatility, and there are ways you can measure that. For example, if you look at the positioning of the asset markets I would try to leverage some of that data to understand thinking. Like just today, I was looking at funding rate, and I'm seeing it's actually going down. So at 94 all-time high, we don't see crazy leverage building up in the futures market. That tells me people are still not going bananas. Nothing crazy going on. It's all orderly growth. So there isn't even a lot of risk for a bubble bursting or so. You can also use some of the more quantitative ways to look at the Bitcoin's patterns, at least. Some of the quantile or power law model that we have been working on demonstrate that there has been a very clear pattern that Bitcoin has followed in the last 15 years. It's possible that that pattern continues more or less into the future. And those things, especially like those models, are also based on adoption. When you look at the rate of adoption, you see that the price is a beautiful function of adoption, the number of addresses. So you can actually mathematically explain how much more Bitcoin is likely to gain on average, and this is all average and statistical responses, but how much likely is Bitcoin going to go higher for a certain number of new addresses forming, right? So when you think about that, it all makes sense. This is a network. Network is growing. More people are joining. You can actually measure. You can have a proxy. You don't have the exact measure, but you have a proxy of adoption. And price has been growing in tandem with adoption, and it's a very safe bet. More people should mean on the margin more money. So this kind of solidifies my fundamental thesis. I would look at these things. Is the fundamental solid? Is it getting better? It's actually getting 10x better. And then are we in a bubble already? What's the thinking? I see a lot of people beginning to kind of get overexcited, but we're right in the beginning of it. We don't even have the mainstream talking about Bitcoin yet. I'm just getting messages here and there. I see in non-Bitcoin podcasts or channels talking about Bitcoin. So this is just the beginning. I don't feel any risk at this point.
Yeah, I like that. And you mentioned books. I mean, do you have any in particular you would like to recommend?
Depends on your mindset. Like Bitcoin Standard, for example, is a very good storyteller, but it wouldn't be my first choice because I would be too pedantic with details that it kind of skips or sometimes too overly simplifies the situation. But it has done tremendous good for a lot of other people. So that's a really good thing if the storytelling style resonates with you. My biggest problem personally would have been with understanding Bitcoin itself, right? How does it exactly work under the hood? Because I guess I had a good background in the economic side of it. So I just wanted to make sure if this all makes sense and if the system actually has sound engineering. For that, you can read books like if you really want to get into technicals, you can read Grokking Bitcoin. It's a very well-written book with nice graphics. Antonopoulos's Mastering Bitcoin is good, but it needs an update. Inventing Bitcoin is another book that's really short, and it's a great first look. The other one, I myself have a like 1 hour lecture on history of money. So if you're interested in understanding how money has evolved over the years, and then another 1 hour on the role of money in the economy. So it's one of the hardest things to get because no one talks about money. We just assume it is, right? And then even if you take economics classes, you don't get much of a deep understanding of money because money is like extremely difficult even to track right now because we don't even see how much money exists. Like it's all scattered in different institutions' balance sheets and all. And it's not very well discussed. But in that course, I'm trying to basically explain what the role of money is in an economy. First of all, why it exists? How does expansion of money supply affect the prices? And I step by step I build the case for Bitcoin in the sense that and something that's really reassuring is any place in the world, if there is money printed, it will pump Bitcoin, even if they don't buy Bitcoin directly with it. Why? Because let's say government prints money and they pay their contractors. Contractors now suddenly get rich. They go bid up all the other assets, and the money gets distributed. When that happens, the relative exchange rates between Bitcoin and everything else changes, and it also bids Bitcoin higher. So money essentially gets scattered from one person to the second person, and some of those people decide to put some of that in Bitcoin again. So it's an absolute perfect measure of money debasement. So, and this gives me an absolute confidence, because previously I would get very anxious very outraged when governments waste money and spend on nonsense project. Right now, I'm like, who cares? You're just pumping me, so at least I wouldn't be paying for your bad decisions. It has a technical and economic dimensions. It's not a single thing that works for everyone.
Yeah, no, thank you so much. So many beautiful books you recommended. I mean, looking at your background, I knew you would have been one give some fantastic recommendations. So thank you so much for doing that. And I completely agree. I think the base should be understanding what kind of problem you want to solve, right? Understanding money velocity, things that nobody is teaching you in school. And, society actually teaches us the, quote, wrong way to live. You go to work, you save on the bank, you buy a house. This is a way to become a broke person. I think that's my opinion. So, Yeah. So I think if you wanna free yourself from this mindset, well, you have to start digging, and then, like you said, you will encounter assets that will allow you to free yourself financially. Where do you stay in gold? I mean, do you have any in your portfolio, or you are just fully committed in Bitcoin?
Gold would have been a great choice before we had Bitcoin, because it's now doing the same thing except less volatile. I think if you look at things like Sharpe ratio and some other metrics, it's actually not very good. It's very strong. But in general, Bitcoin has all the benefits of gold in terms of debasement hedging, but it also has all the other benefits. It's, first of all, it's usable. How are you going to buy any services with gold? You just can't spend it, right? It then becomes a place where your money is stuck. You can't move it easily. You can travel with it. You can change the place you live without selling, incurring taxes, and then it's all painful. And then the second part that's really important is Bitcoin also benefits from all the adoption. So even if there is zero debasement going on moving forward, you still get a ton of appreciation just because this asset is new, and so many more people need exposure that they don't have it yet. So I'd love to bet big on the fastest horse, but nothing against gold bucks.
Yeah, I agree. Also, liquidity is a problem. I used to have a position in London, and when I moved to Dubai, it was a complete headache. I mean, first of all, I didn't have my gold, like someone else has it for me. So that means it wasn't in my hands, because there was in some sort of a private cavo with guys with guns guarding it. So, okay, well, that's not mine. Okay, whatever. There is only a promise that it's mine, but whatever. Second of all, I couldn't move it to Dubai. I can't go to the airport with bags, supermarket bags full of gold. Hey, I'm going to Dubai, Habibi. They're not going to let me do it. So it's not portable. It costs money to store. So it becomes a bit tricky. I do like the idea of gold, but like you said so well, I think Bitcoin is fixing some of the problems that the gold has created. So, but I have part of my DCA out in this bull run. I have a gold position that I would like to have, but I haven't figured out yet. It's going to be a small percentage just because I like to hold it, because I think the vibration is pretty cool. But besides that, I think, Bitcoin is really hard to beat. That's for sure.
Yeah, maybe if you have a thesis that we have appreciated so much and now the downside risks are higher, at that point, it's not a bad idea, because then all the stuff about network adoption would be on pause when it's in a bubble that's expanding. So, but gold wouldn't have that thing, right? Because it's already mature. It doesn't get into a bubble or anything, but it will just give you the continuous exposure to debasement hedging. My friend Stephen Perrineau, that we have interviewed on 21st Capital's YouTube show, he gave us a lecture a while back about something called Kelly criterion, This is a tool for portfolio management. And for example, if you're thinking, okay, I have Bitcoin, and then what if I also own gold? You can create a portfolio of them. But when Bitcoin is going so much faster, you can run the numbers and it will tell you, okay, seems like a very, very high position in Bitcoin and a small position in gold is prudent right now. But over time, as the investment profile and the volatility and risks change, that will also inform you to rebalance and maybe increase the gold position and so on. So there is also a more methodical way to approach this, but it's definitely not a bad idea to think in terms of a portfolio.
Well, I also have the same mindset. And I mean, I don't think we are now in a phase where gold is more convenient than Bitcoin, because I think Bitcoin is about to go into a parabolic run. But maybe, like you said, you can always look at the portfolio and, readjust it based on market condition or bubble territories and all this kind of stuff. But yeah, Sina, thank you so much, man. It's been an absolute pleasure having you on the show. I really appreciate your perspective.
Thank you very much. I appreciate the invite, and this was so much fun.
Nice. We should do it again. And guys, thank you so much for watching, and we'll see you guys on the next one.